You most likely said, yeah, I will believe it when I see it after reading the video's title. However, I want everyone to understand exactly what transpired in this market today. It was a day of great importance. Because it affects more than just cryptocurrency, we should all be keeping an eye on days like today. It affects our prospective new mortgage rates. It affects how much interest we pay on loans. It doesn't even have to be mortgage payments. It might have to do with debt. Therefore, in light of today's events, it is indeed crucial for cryptocurrency values. Indeed, it's crucial for cryptocurrency liquidity. More significantly, though, it's vital to concentrate on for daily living. We are now in a sea of green, as you can see from the everyday view. It's true that some of these gains aren't extraordinary, but this is a great beginning for the large market rebound for old coins. Looking at the weekly once more, we still see some very slight gains on many of the old coins we love, such as HBR up 3.5%, XLM up 2.7%, and XRP up 3.3%. Nevertheless, there are still some excellent outliers that have seen significant increases in value over the past week. And if you're concerned that your old coin hasn't moved much over the past 7 days, you know that this is only the beginning. For vintage coins to resurface and possibly experience a wild surge to record highs, as implied by the video's title, the Federal Reserve is indeed on the verge of causing all of these price increases. We're not simply discussing particular ancient coins. No, every single component of this market will reach previously unheard of heights. Not all altcoins will now reach new all-time highs. I want everyone to know that. However, the total 3 should reach a new all-time high. Others need to reach a new record high as well. As a result, everything will rise in the charts. The majority of altcoins ought to reach fresh all-time highs, and there will be a lot of excitement during this period. Let's take a brief look at the market itself now. The most important thing to note here is that Bitcoin is up 1% on the daily and up 3% on the weekly. I know it doesn't seem like much, but hey, Bitcoin is up nearly 118k, which is nearly a full retracement from the lows back to its previous highs. Ethereum is down 4,600 plus XRP to $3.10. On top of everything else though, what was today's Fed action? We all know by now that the Fed lowered interest rates by 25 basis points. The year's first rate cut is this one. Currently, a median forecast for 2025 shows 50 BPS and further rate reductions. 2 further rate reductions of 25 BPS might suffice. A 50 BPS rate cut in October and another in December, however, is still something I believe will be extremely fascinating. This represents a 1.25% difference. Does this occur now? We're not sure, are we? This is a speculation on my part. As I mentioned before, it might be as easy as implementing a 25 BPS rate reduction in October and December to replicate our September actions. As we go over these next several, Governor Moran dissents in support of a 50 BPS cut today, which is the fundamental reason why we are now beginning to see a massive full unalignment at the Fed. The Fed claims that there are now more downside risks to employment. No rate decreases are anticipated in 2025, according to 6 Fed officials. But according to 9 Fed insiders, there will be 2 more rate cuts in 2025. The Fed is now focusing entirely on the labor market. They don't care about inflation right now, which is evidence of why we had the rate cut today. As you can see, CPI data has been indicating that inflation has returned and is probably going to rise. A huge stunner, huh? Inflation is currently increasing at the same time that the M2 supply is expanding upward. Well, how could anyone have known? However, once more, the Fed is returning its attention to the labor market. Indicates that before the end of this year there will probably be 2 more rate cuts. At this point, the Fed is completely disengaged. Indeed, there is a great deal of instability at the Fed, with 9 members predicting 2 more rate reduction while 6 officials see no more in the future. It just serves to highlight the fact that they lack organization and cohesion. Although there is a total disconnect, this once more indicates that anarchy is on the horizon. The most important thing to remember here is that we make money, we keep the profits, and I still believe that we have moonbags. I continue to believe that we should invest in gold, silver, and similar assets, because I believe that 2026 will be a turbulent year. Additionally, I believe that several of these markets will be quite volatile. However, the short term is the primary focus of our attention. The short-term outlook is very optimistic, and we're back to $4+ trillion if we look at the cryptocurrency industry now. We have finally reached those earlier peaks, 409 trillion. Greed and fear return to 51. 73 out of 100 is the old coin season index. Once more, the market is experiencing a very big bounce. The cryptocurrency market capitalization is nearly back to its previous peak. The greed and anxiety are resurfacing in a big manner. Even though the market is rebounding strongly, we are still at number 51. If this began to revert to that level of greed, I wouldn't be shocked. However, the fact that we are still in neutral area, even though we should be rather positive, shows us that we still have a lot of fuel left for the market to pump higher regardless of how sentiment feels out there. The altcoin season index is also included. Indeed, all coins continue to exhibit remarkable strength versus Bitcoin, which is why I continue to believe that we should concentrate on the market's older currency segment. Old coins that are depreciating or that are really dull should still be purchased, merely examining a few items. Given the news today, the S&P began to see an early decline. Correct? There was some volatility. We struck about 6,550. At 6,600 we ended the day. The problem is that some bearish divergence is actually beginning to appear here. And by that I mean that the S&P is beginning to rise again at the same moment as the RSI is beginning to decline, after reaching its earlier highs in July. When it comes to equities, the crucial question is whether or not increased stock prices help us completely. However, I do believe that stocks will become somewhat dull in the near future. I believe that we will touch 7000 plus by the end of this year, after a deeper retreat, after which we will lag a little until the S&P begins to bounce significantly larger. Yes, but I would like to see the S&P become somewhat dull. Before it reaches its peak again, I would want to see it sell off and then chop sideways. I mention this because I know you have all likely watched my video from the other day, and if the S&P is going to start to get stale, we should start to see the cryptocurrency market grow upward at this period. A weekly candle close is approximately 3 days and 21 hours away. Even though we had a strong wick to $4.17 trillion, the most significant aspect of this is that we are breaking over all of that August resistance. In essence, this will be a higher time frame close at a new all-time high, as we are now surpassing the highs on which we ended the week. And as a result, the total will go crazy and continue to rise upward. The fact that the stock market is beginning to decline here is ideal right now, during a period when the total is beginning to gain momentum, since in my opinion, the S&P is not going to sell off too quickly. No, even while the S&P has a minor decline that is somewhat comparable to that of cryptocurrency, we ought to start cutting down and becoming a little less interesting during this period. The sum should keep rising, and I'm sure you're aware of how awful these drawings appear. However, that's precisely what we ought to begin observing on these charts. The S&P is still doing well, isn't it? As the year draws to a close, we'll still estimate that we should actually finish pushing for $7,000 by the end of this year. And since we have a bar chart over here, the Fed decreasing rates are in line with this. The S&P 500 has finished higher during the following 12 months when the Fed lowers interest rates within 2% of the stock market's all-time highs, 20 times out of 20. This hit rate is 100%. You may ask, is this time different? When we consider that this has been going on since the 1980s, we would have wagered on that one of those 20 times in the past. Alright, so this isn't like, oh, in the last couple of years. No, since the 1980s this has been the case. 20 times out of 20, the Fed has lowered interest rates within 2% of the peak of the stock market. Over the following 12 months it finished higher, which is precisely what I mean when I say that the S&P is still doing extremely well. However, we ought to sell off. We ought to take a step back. While RSI fully resets, we ought to have some chop. Alright, as the stock market simply declines into the mid to 6,000 region, have it reset at about 50. The price of the S&P should then begin to trend back upward when this